Welcome to the InterMarket Analysis video update. This video looks outside of just the S&P 500 to look at other stock indexes as well as other markets to see if we can get any clues or insight as to what's happening with the S&P 500 itself. This is being prepared for Tuesday, May 30th. The first thing we look at is valuation. How is the S&P valued historically and then going forward? The first chart that we look at is a monthly chart of the S&P, and we have the PE of 20, 15, and 10 on this chart. 20 or above is considered expensive, 15 is that sweet spot, 10 or below is considered to be inexpensive. Right now, we are above the PE ratio of 20, so that means on a historical basis, the S&P 500 is overvalued. Down below, I have a spread of the price of the S&P to the PE ratio, showing when we're above zero, we are indeed overvalued at this point. We also have another chart where we show different events that have happened in recent history going back to 1980 and what the valuations were at that time. Another thing that we look at is the Shiller PE ratio. This was developed by Robert Shiller. You may also know it as CAPE, C-A-P-E. This suggests that stocks are still overvalued historically, coming in at 29.48. We look at this chart up above to see that the median and the mean is between 16 and 17, and we're almost at 29.5. So yes, on a historical basis, the market is considered overvalued. But the market doesn't look backward. That's interesting to see where we've been, but the market likes to look forward. We have another thing called forward PE ratios, and that's based on analysts' guesses and estimates as what companies will be earning into the future. Right now for the S&P 500, it's at 18.3. We're below that 20 level, but still above 15. We also look at the mid caps, which come in right now at 13 with a forward-looking PE ratio. That's below the 15, but still above 10. And then the small caps are also above 10, coming in with a forward PE ratio of 12.9. Another thing that I usually cover in the weekly video update, but the site wasn't updated when I went to record, is a thing called current market valuation. This is a freely accessible website where they try to give you an idea, is the market overvalued or undervalued? Right now, they're saying that we're fairly valued, even though we're tipping over into this overvalue area. This is the historical chart showing the aggregate score over a period of time. We're just under this one standard deviation. We should be down around the black line to be fairly valued. If we cross above this yellow line, the market will be considered to be overvalued at that time. Then we have a number of charts inside of this model to give us some indications as to what's happening. The first one is the Buffett indicator, and that is overvalued since we're above this one standard deviation level. We also look at the price to earnings model. It's also above this one standard deviation level. Then we look at the interest rate model, and this is probably a little bit skewed because we have so many yield curves that are inverted. This is fairly valued currently. The mean reversion model, how far are prices getting away from their mean or average price over a period of time? The S&P has become quite far away right now. The gray line is the historic trend. So once we go above 1, it's considered to be overvalued. Then we have some recession indicator models that we look at. Right now, the yield curve model is very high because we have so many yield curves that remain inverted. Also, we look at the state coincidence model. The more this goes up, the more likely we are headed into a recession. Right now, this reading is quite low. We also look at market sentiment, margin debt. When people are feeling better about the stock market, they're willing to borrow from their broker to buy stocks. It's still giving us a neutral reading currently. We have a junk bond spread model, which also remains at neutral. It's below its historic trend line. So they take all of these together and put them into one overall score. Then we look at another thing called growth versus value. Growth is when you want to buy low and sell high. These are the companies like Microsoft, Apple, Google, that you want to buy at one price and then be able to sell them at a much higher price down the road. Value stocks are generally older companies. They may not go up and down as much in value, but you're getting dividends. They have a track record. They may even be boring to some extent. When the market is really doing well, we favor growth stocks. When the market's having trouble, we tend to favor value stocks. So we look at a number of different charts. First, we look at a pure growth index where the growth is still in an overall downtrend. The interesting thing is value is also in a downtrend, But when we compare the two, growth versus value, growth is just getting ready to give us a golden cross here and start to outperform value. An inverse of that same chart is value is now starting to underperform growth. Then we look at a number of different ways of looking at growth versus value. This is a ratio of two ETFs, where it shows that growth had really been underperforming, and now we're just starting to get a golden cross in this ratio. Value is starting to give us a death cross when compared to growth. We also look at a couple of indexes where we've already seen a cross with growth turning more positive. And then here, this is where value is turning more negative. This ratio looks at the growth index versus the value index, where we're starting to see a golden cross. Another thing that we're really noticing right now in the markets is the small caps have really been underperforming with their index. They are going down overall. But if you look at the growth to value ratio, growth is really outperforming. Interesting, we're also seeing this with the mid caps, and this is really going up strong, even though the index has been going down. We also have another ratio, growth versus value, where growth had been underperforming. Now it's really starting to improve. And then this is an inverse, where value had been outperforming, and now it's starting to underperform. Then the last chart here, we have the S&P growth versus value ratio. Ever since the beginning of February, growth has been doing pretty good overall, even though the market's been having some difficult times. Some inflation gauges. We have a monthly chart of the CRB index, which is in an overall downtrend. Then we have an inflation to deflation ratio, a monthly chart. When this is dropping, that means that inflation is subsiding. We also look at the Baltic Dry Index. How much does it cost to ship goods from point A to point B? When this is going down, that means that it costs less. We also look at the CRB index, which is in an overall downtrend, and this is one of the inflation gauges that we like to look at. Some other markets, aluminum, see how it's in an overall downtrend. Corn is also in a downtrend. Wheat is in an overall downtrend. Fertilizer has been coming down. Heating oil has also been coming down. Gas is kind of chopping around a little bit, but it's still in an overall downtrend. Natural gas has also been coming down. Oil has also been falling. Diesel continues to fall. Lumber is also in a downtrend. Copper, still in an uptrend overall, but showing some weakness. This is what we call Dr. Copper. When things look better economically, copper goes up. Gold tends to go down. We had been bouncing up nicely with copper. We're rolling over, and we could be seeing a death cross very soon. Then we look at gold, which is in an overall uptrend, even though it's showing some recent weakness. We have the copper to gold ratio, showing that copper is underperforming gold, but bouncing back lately. This is a longer term look at that same chart where we compare it to the 2-year yield. We have a really wide spread between these two charts. In a good, healthy environment, they tend to go in the same direction, and they tend to not get very far apart, even though they're on different scales. We also look at gold to silver, showing that the correlation between the two is very high. Then another chart which looks at the gold-silver ETF ratio, that's on the top, and what is it doing in relation to the US dollar? When the dollar is going up, gold tends to outperform silver. When the dollar is going down, silver outperforms gold. Note that they both can be going up overall. It's just which one is outperforming the other. We had been seeing a real decline in the dollar, so that means that silver had been doing better. We're starting to see the dollar rebound a bit here, so that may mean that gold will start to outperform again. And then on the bottom, we see where the correlation is very strong between the gold-silver ratio and the US dollar index. Silver remains in an overall uptrend. The dollar is in an overall downtrend, but it is starting to bounce back up a bit. The euro has been falling in relation to the dollar. And then on the top, the Japanese yen has also seen some recent weakness. The euro is going down as the dollar index has been bouncing back up. Here's a single chart of the Japanese yen to the US dollar where the Japanese yen is still in an uptrend, but we are seeing some weakness in the Japanese yen. The British pound is in an overall uptrend compared to the dollar, but showing some recent weakness. Then we look at some different index ratios. The S&P 500 to the CRB index ratio, where the S&P 500 is outperforming the CRB index. This is an inverse of that same chart, showing how the CRB index is underperforming. Then we look at the NASDAQ 100, which is just going to the moon right now and is outperforming even the S&P 500. The equal weight stocks, this is a little bit of a concern. They are improving a little, but they're underperforming the S&P 500. There are times when the equal weight index does outperform, and that's when we tend to see a good solid up move. That's why a lot of folks are a little gun shy right now, even with Friday's advance. The S&P 100 is really outperforming the S&P 500. The small caps are underperforming the S&P 500. In a good solid environment, we want to see the small caps doing well. The NASDAQ is really outperforming the S&P 500. And the NASDAQ 100 is outperforming the NASDAQ, and they're both doing pretty well currently. Then looking at some other stocks, this is the NYSE advanced decline line, where the NYSE is below the moving average but turning back up. The same thing is said for the S&P 500. The mid caps are showing some improvement, but we're still seeing overall weakness with the small caps. We look at the 30 biggest software companies, where they're going sideways overall but showing some improvement and still in an overall uptrend. Mega cap growth, this is where a lot of the strength is coming from right now. This index is really going up. We take a ratio of the mega cap growth and compare it to the equal weight ratio, and the mega cap growth is really outperforming. The Dow Jones Composite Average, which takes the Dow, the transports, and the utilities, they're pretty much chopping sideways overall, but they're still in an uptrend. Low volatility stocks, which were the place to be in 2022, they're now seeing some weakness. And when we compare that on a ratio basis to the S&P 500, we're seeing a recent death cross with low volatility stocks really underperforming the S&P. Looking at Dow theory, where we're coming back to recent highs with the Dows, but we're seeing a negative divergence with the transports. We came almost back with the utilities, but lately we've been seeing a lot of weakness in the utilities. This could suggest some longer-term weakness. The FANG index has really been doing well. ARK, though, still is really suffering and is in an overall downtrend. Then we have a new take on Dow theory, where we use the S&P 500 instead of the Dow. It's breaking out. The NASDAQ instead of the transports, it's also breaking out. This is a positive divergence right now. And finally, as of Friday, the S&P was able to close above 4,200. Now we're wondering, can this continue? Then we look at the S&P 500 and then compare it to stocks in Europe, Australia, Asia, and the Far East. We're bouncing up off of this moving average. The PPO on the bottom is starting to turn up, so this is showing some improvement. Please keep in mind that this is a monthly chart. Looking at bonds versus stocks, bonds continue to be in an overall uptrend, but they have shown some weakness. This ETF is coming down to its 200-day moving average. The Pring World Bond Index chopping around all over the place, but still in an uptrend, but showing some weakness. The stock to bond ratio on the monthly chart shows that stocks are really outperforming bonds, and bonds are underperforming stocks. The high yield corporate bond ETF, you might know this as junk bonds, it's in an overall uptrend as well, and the investment grade bonds have seen some recent weakness. The stock to bond correlation shows that they're having a slight tendency to go in opposite directions currently. The Dow Jones Corporate Bond Index in an overall uptrend, but showing some weakness. Looking at the 10-year yield, we're starting to go back up with yields now. We're at 3.81%. Here's another look at the yield, also showing how we're breaking above this previous resistance level. And then we also have a chart showing how the S&P was underperforming the rise in interest rates, but now it's starting to outperform the rise in interest rates. Here's the 30-year yield, where we're starting to go back up again. And then looking at junk bonds, they are showing some weakness. They tend to follow the stock market overall, but we're in an uptrend. Then when we look at junk bonds versus government bonds, junk bonds are really outperforming. We also look at the Treasury Bond ETF. This is bonds based on price, where they have been showing some weakness. We're below 50, but turning back up slightly with the RSI, and we're still showing negative momentum with the MACD on the bottom. Then we look at different yields from the 3-month out to the 30-year, seeing it really chop around in Friday's session, but overall interest rates are starting to go back up. This is a weekly chart showing the US, the UK, and German rates going back up. Japan still has their rates really low. They're a special situation that we're keeping an eye on. Then looking at the 5-year yield, where it's starting to come back above this moving average. The special K, however, has it going down, but the KST on the bottom has it going up. So we're not really getting a clear picture from this chart. Looking at the 5-year again, short term, we're going back up. Intermediate term, just getting ready to cross over, but longer term, we're still in a decline. Then looking at the long bond ETF, which is below its moving average, short term it's going down, intermediate term could be rolling over, long term is still positive. Comparing the price of bonds, it's showing that bonds are outperforming the CRB index. Even though we're seeing some weakness lately, we came up to this moving average and are starting to come back down. Then we look at a thing called the MOVE Index, which measures volatility for bonds. On the bottom is the VIX, which measures the volatility of stocks, and we can see there's a really strong correlation between them. We did tick up a little bit with bonds in Friday's session. We were up with stocks, so the VIX actually ended up dropping. Looking at some different sectors, this is the material sector compared to the S&P 500, where it's in an overall downtrend. Communication, this is a current area of strength, is in an uptrend. Energy, which really did well in 2022, is now in a downtrend compared to the S&P. Financials, with all the banking information coming out, they are really underperforming. Industrials, just seeing a death cross here and underperforming. Then we look at tech to the S&P 500, which is just going to the moon overall. Staples, which did really well in 2022, are now starting to show some weakness, and we're seeing a death cross in this ratio. Real estate, also underperforming the S&P. Utilities, underperforming the S&P. This could be positive for stocks, though. We reverse that previous chart and take S&P to the utilities ratio. When this is going up, a lot of times that gives really good support to the S&P. And when we look at healthcare, it's also in an overall downtrend. Here's another look at healthcare showing the ratio is underperforming. Then we look at discretionary, which has pretty much been chopping sideways. It's not that discretionary is doing so great, it's that staples are doing pretty bad currently. Here is the staples sector, where it's really been falling even though it's in an overall uptrend. The tech sector has been doing really well lately. Semiconductors up really strong this past week. The tech sector to the S&P has been really outperforming. And the energy sector, which really did well in 2022, is now underperforming the tech sector. We look at the growth ETF and compare it with bonds. They both really suffered in 2022. Now growth is really starting to outperform. Then the tech sector, to the rise in interest rates, where the tech sector had been underperforming, now it's starting to outperform. And then discretionary is showing some improvement compared to staples, but they're both really struggling right now. Staples to discretionary, showing that staples are in an overall uptrend, but showing some weakness. Then gold to the S&P is still in an overall uptrend, but showing some weakness. Gold to the dollar came right up to this red trend line here and then back down. On the weekly chart, we hit that line and then immediately reversed. Looking at high leverage loans, these are risky loans. If the economy was getting ready to fall off a cliff, would this be going up the way it is? Probably not. Then the InterMarket Analysis chart, now that we have a few months into 2023, I've gone back to the beginning of the year, showing that right now stocks are actually doing the best. Then we have gold, followed by the dollar, and then bonds. And what had been doing really well is oil. It's now negative on the year. Then looking at the small caps, the S&P 500, before I said we want small caps to do really well for the S&P to rise, they are really underperforming. When this red line really starts to spike up, that's the ratio line. It will often give some support to the blue line, which is the S&P 500. The NYSE composite showing some weakness, but in an overall uptrend. The Wilshire's looking a little bit better and also in an uptrend. All stocks are in an overall uptrend. Emerging markets, pretty much chopping sideways now, but still in an overall uptrend. Bitcoin, still in an overall uptrend, after it got up into the 30s, has now been falling back. Then looking internationally, China is now in a downtrend. We're pretty much flat with the emerging markets, rolling over a bit in Europe, in a decline in Japan, and trying to turn back up in the US. Looking at some correlations, the S&P to the dollar, they're pretty much neutral right now, but they're having a slight tendency to go in the same direction. The S&P to oil, it is neutral. When we're at 0.25 down to minus 0.25, I consider that to be a neutral correlation. The S&P to the 10-year, it is starting to fall back down a little bit, but they're still having a slight tendency to go in the same direction. The tech sector to the 10-year yield also coming off of going in the same general direction. The S&P to the 2-year also having a tendency to go in the same direction. Then we look at a housing study where we look at the home builders, where the S&P has been breaking out as of Friday. The home builders did a little bit better. The ratio is going down a little bit, and there's still a pretty strong correlation between the two. What we look for in this chart are some kind of divergences, either positive or negative, and we're not really seeing that right now. Then we look at secular, which means really long, and compare it with cyclical, which means not as long, trend studies. This is the NYSE composite with a monthly index. We're dropping below the moving average a little bit, but if you look on the bottom, the Kopit curve is still turning up positive. Also with the NYSE, we have the NYSE record high percent index. That is still positive. Then we look at the S&P with the PPO on a monthly chart. This is turning back positive. We also compare the S&P to the CRB ratio, where the S&P is outperforming the CRB index. Here's S&P to a global index, showing that we're still in a downtrend overall with the KST, but on the positive side, we're still above this moving average on the price chart. What is positive right now? What I define as positive, according to this video, is when the 50-period simple moving average is above the 200-day simple moving average. The Dynamic Software Intellidex Index. Those are the 30 biggest software companies. The euro, the Japanese yen, and the British pound to the dollar, even though the dollar has been bouncing back. Copper is still in an uptrend, but it's been showing some weakness. Gold and silver are doing okay, but they're also showing some weakness as the dollar is going up. Mega caps are really strong right now. The low volatility ETF, it is starting to come under pressure, but it's still in an overall uptrend. The Dow Jones Composite Average, been going sideways, but still in an uptrend. The FANG Index, doing really well. The different bonds that we look at, the ETF, the high yield, the investment grade bonds, the world bonds, the corporate bonds, and the junk bonds are all positive. Staples, positive, but could have its days numbered. The tech sector and the semiconductors, very strong right now. High leverage loans continue to be positive. The Dow, the NASDAQ, and the NASDAQ 100. The NYSE composite as well as the Wilshire. All stocks that we looked at, emerging markets, and Bitcoin, even though it's falling back, is still in an overall uptrend. So what's negative right now? Anytime the 50-period moving average drops below the 200-period moving average. The growth indexes, when you look at them alone, they're still in a downtrend, as are the value indexes. The CRB index is going down. The dollar is still going down, even though it's bouncing. ARK is still really having some problems. Micro caps, small caps, and mid caps, when you just look at their indexes, they are showing weakness. So thank you. I hope you found this helpful. I did prepare a daily video for Tuesday, May 30th. I also have a weekly video that you're more than welcome to check out. After this, I will be posting what I call the deep dive video. I hope you're having a really nice Memorial weekend, and I will talk to you in the next video.